information for you this evening. We are going to talk tonight about PPP loans. As you may know, this is a program that was initiated in the beginning of the pandemic by Congress to support small businesses who are experiencing disruptions due to the coronavirus pandemic. And in the more recent legislative action by the Congress this winter, they created a second round of PPP loans. So we wanted to provide an opportunity this evening for business owners and community members to learn more about this second round of PPP, how it differs from the first round, how to apply, how eligibility works, and all that good stuff. A quick programming note, we intended to have live interpretation in Spanish for this event this evening, but unfortunately the Zoom capability, I think they're still working out the kinks. It's a new feature on Zoom. Hold on just a moment. We may have that precise problem solved here in just a second. As we figure all that out, I'll say a couple of additional programming notes and then we'll turn it over to Nancy. First of all, thanks to Emily Melby, my chief of staff. She is monitoring the comments on our Facebook live stream. She's also available, if you're watching this after the fact, you can always email our office, emily@repguzzardi.com, emily@repguzzardi.com. In the live stream, on comments on the Facebook pages, and we will try our best to field them. We're going to be as nimble as we can here as this goes. And I think that Elsa is now on, so we may have that Spanish interpretation happening live. And if we don't, we are going to provide captions for the program in Spanish.
Here.
Tomorrow. Oh, hello. Hi, Elsa.
Hello, everybody. I was able to get in. I'm looking for the link for the interpreting on here, but it's not giving it to me.
Yeah, I'm not sure how that's going to work. I think if you can, Emily's going to communicate with you about that. I think we'll maybe just have Nancy start her presentation, and whenever this gets going, you can just jump in with the Spanish. And for those who are listening in Spanish, hold tight, and hopefully we'll get this going soon. So let's kick it over to Nancy. Nancy McClelland, the dancing accountant. She is one of our favorite folks to have working with us on these issues. She is the accountant to many of the wonderful small businesses in the 39th district. She's a dear friend. She's worked closely with us over the years, and she was on our Facebook a few months ago when this was first starting, walking folks through the first round of PPP. And so we decided to bring her back for PPP round 2 to do another wonderful explainer. So I'm going to kick it over to Nancy. Nancy, thank you so much for joining us this evening, and take it away.
Thank you so much, Will. I really appreciate it. It's a real honor to be here and to be able to share all of this information with small businesses out there who don't necessarily have the resources to be able to work with a professional accountant, and you know, are still interested in financial relief and might do well to get a primer on how you could potentially do this yourself. So we've got a lot of material to cover today. The slides will be available after the session, and once the session is over and they've made those slides available, you'll see there are a lot of links in the slides, and there's a lot of information on the slides that I'm not going to actually cover in my session since we only have an hour. So those are designed for you to really be able to use those during the process of applying for the PPP to yourself. And there are also a lot of videos and other sessions that you can take with other people that are highlighted in the slides. So I hope you get a lot of use out of those afterward. So with that, I'm going to go ahead and share my screen. And get this going. So as Will said, I have been working in Logan Square and small business accounting for 20 years. As a matter of fact, next week will be my 20th anniversary of running my own accounting business in Logan Square, which is very exciting. I was going to have a huge party, but that's going to have to wait until later this year. I'm a CPA with a master's in accounting and financial management and a certified QuickBooks advisor. And I have an award-winning blog at www.thedancingaccountant.com. And that's a resource I really encourage you to use. It is about half for colleagues of mine, you know, other accountants and bookkeepers, and half of it is for small business owners. And there are always updates on what's going on with financial relief programs, credits, loans, PPP, all of that kind of stuff. And yes, a professional dancer, a client gave me the name The Dancing Accountant many years ago at Unity Park at a go-go dancing event. I just wanted to give the legal disclaimer that this is intended for educational purposes. I am not, although I am a CPA, I am not your CPA, and I can't know your specific situation. So none of this should be construed as legal advice. So let me talk about what we're going to talk about. We're going to do a summary of the Paycheck Protection Program. We're going to do a current program overview. We'll talk about eligibility, how to apply, where to apply, and we'll do some basics on forgiveness, but really forgiveness could be its own 1-hour session quite easily. So most of that is just going to be referenced for you in the slides. And then we'll talk about some resources, and if we have any time, we'll answer some more questions. So let's talk about the basics of the PPP. The Paycheck Protection Program is a forgivable loan, which essentially means it's a tax-free grant. No personal guarantees or collateral are required for it. It's intended primarily to cover payroll, at least 60%, but also some overhead costs. You apply through a bank or another financial institution. Unlike other SBA programs, you do not apply directly with the SBA. But I want to be clear that this does not need to be your bank that you apply through. It can be any lender that's participating in the program. And there are many options, including community banks, financial technology lenders. There are third parties. You can, if you have an accountant, ask your accountant if they have a recommendation for you, or your payroll provider. Actually, almost all of the big payroll providers out there have a company that they have partnered up with to actually offer the PPP loans. And I'll give a couple of suggestions later in the session. So the initial round of PPP, there were a lot of challenges. It was a pretty miserable summer, to be honest. The initial round began on October 3rd. They ran out of funding in 13 days. Businesses with more resources, the folks that could afford in-house CPAs or had existing relationships with bankers, they initially received most of the money. And it was really rife with problems. The program was then replenished on April 26th. It ran through August 8th. There was a lot of missing and conflicting guidance as far as both the application and the forgiveness was concerned. And there was a lot of concern about the significance of the certification. You have to certify that there's enough uncertainty that this loan is necessary. People were worried that if they took this loan and then it turned out things didn't turn out to be as bad as they thought it might be, then were they going to get in trouble? The answer now we know is no, but it made a lot of people scared. And they were also afraid of being left with a loan that cannot be repaid. Since then, we have had a series of guidance releases from the SBA, from the IRS. We had new legislation from Congress in June, the Paycheck Protection Program Flexibility Act, and then of course, this most recent round of stimulus and relief in December. The rules now are much clearer. The program is much more beneficial for small businesses. The new round of PPP just opened on January 11th, and it was a much more deliberate and focused approach for both the lenders and the recipients. It opened up in a phased way so that community lenders had access to it first, and then it opened up to small banks, and then it opened up to the biggest banks. The deadline to apply is March 31st, and they do think that there is enough money in this program that it will probably last through that date. But if they run out of money beforehand, the program will end. So I do encourage you to get your application in sooner rather than later if you can. I want to clarify that it is not too late to apply for PPP1. If you did not take the PPP loan the first time around, it's not too late. You can apply for it now. You have another chance to get that first bite at the apple. But we'll also be talking about the folks who did take it first time around and they get a chance for a second bite. So there are a lot of options for financial relief right now. This is just to provide a little bit of a broader context for the program we're talking about here. If you are a small business and you are hurting and you have not yet applied for PPP1, this should be first on your list of things to consider. If you did apply, well then determine whether you are eligible for the second round, and if so, apply for that. But you could also look into the employee retention credit. It used to be prohibited to take both employee retention credit, ERC, and PPP at the same time, but this new legislation in December changed all of that. You can take them both at the same time, but you can't use the same payroll dollars, which means you can't double dip on which dollars you're claiming for each program. The rules are very complicated. They're different for 2020 retroactively than they are for 2021. You get a chance to go back and claim some, claim some stuff from 2021 retroactively with amended payroll tax returns, but it is very complex and the interaction between ERC is complex. So if you do go this route, this is not something that I recommend you doing on your own. That's probably the point at which you want to find a trusted advisor. You can also research state, local, and private grants for your specific location and industry, as well as grants from big companies that are trying to make themselves look like they're really small business friendly. So there have been grants from FedEx, from American Express, from QuickBooks, from PayPal, so many of them. I think even Trader Joe's had one. I mean, it's kind of amazing. So get out there and use Google and see what else you can find. You can also consider other SBA loan programs. They may not be grants anymore, but there are some good loan programs out there. Reach out to your local Chamber of Commerce and your representative's office, such as Will's office, for suggestions. They can generally point you to community financial institutions or local nonprofits that are willing to help. So today we're just going to talk about the current round of PPP funding for both PPP1 and 2 borrowers. So to be eligible, you have to have been in operation on February 15th, 2020. If you decided after the fact, if you were ramping up your business and you hadn't opened yet, or you decided during the pandemic, maybe you lost your job and you decided to start freelancing, that doesn't count for PPP. It's trying to maintain the status quo. So wherever you were at that point in time, that's where they're trying to get you back to. There are special rules for seasonal businesses that I'm not going to cover here, but be aware that those are out there. You can Google that and learn more. You must have payroll or self-employment income for partnerships or sole proprietors. It would be self-employment income and not necessarily payroll. Payroll means anything on which you paid payroll taxes, Social Security and Medicare. We'll talk about that in a little bit. And as I mentioned before, you have to certify that the business needs the money. If you do not need this money, you should probably not be trying to get it. This money belongs to the people who need it. That said, you do not need to be suffering the most in order to be suffering. So if you need this money, please, it's here for you. Come take it. For PPP2, if you did take PPP1 already and you're coming back in to get that second bite at the apple, you do have to show a 25% drop in revenue. We're going to talk about that a little bit too. Ineligible borrowers, there's a long list here. It's not even a comprehensive list. But the main two are if you were not in operation on February 15th, 2020, you're not going to get anything. Or if your applicant's business has permanently closed. It's okay if the applicant has temporarily closed or temporarily suspended operations, but if you've permanently closed, then this is not the loan for you. The amount of the loan for PPP1, 2.5 months of your 2019 or your 2020 payroll. You obviously want to use whichever is higher. And if you're taking that second bite at the apple and you're going in for PPP2 now, the second draw is also 2.5 months of 2019 or the past 12 months of payroll. So the 12 months immediately preceding when you're applying for the loan. Or, and this is pretty amazing, the SBA and Congress recognized that restaurants and hotels are really suffering right now. They're suffering even more than the rest of us. And so you actually get 3.5 months for PPP2 if you're a restaurant. So that has made a big difference for a lot of my clients. The key differences between the first draw and the second draw PPP loans. Okay, so we're still talking about the current program. We're talking about what, right now, if you're applying for the program and you haven't gotten PPP before, in which case you're doing your first draw now, or if you have gotten it before and you're doing your second draw now. The eligibility differences are not significant for most of my clients. I don't have clients with 500 employees or 300 employees, but that is a change between the first and second draw. There's no revenue reduction requirement if you are coming in for a first draw. You don't have to prove 25%. You get the same rules that they got first time around. The maximum loan amount is only 2 million instead of 10 million. If you're doing the second draw, again, I don't have clients who have that kind of payroll, so that doesn't affect us. And then the payroll period, if you're doing first draw, you can use either 2019 or 2020. Choose the higher one, obviously. For most people, that's going to be 2019. And for the second draw, most people are going to use 2019, or you can use the 12-month period prior to the loan. So what counts as payroll? This is actually the hardest question, and you would think it would be really easy, right? You'd think, I know what payroll is, but it turns out for the purposes of the Paycheck Protection Program, payroll's got all sorts of weird stuff. Payroll for the purposes of PPP can be thought of as anything on which you pay payroll taxes. Now, payroll taxes are also known as Social Security and Medicare. They're also known as self-employment taxes. These are all the same thing. So if you have any income on which you're paying payroll taxes, like self-employment income, or if you have any wages to employees that on which you're paying payroll taxes, of course, that would count as payroll. So this means it might be different depending on the entity. Obviously, the W-2s count. Anybody who has staff is going to be paying them via W-2. Paying independent contractors doesn't count, but paying staff via W-2 does, whether you're paying it to yourself or your staff, because if you are an owner in a corporation, you are an employee of your own corporation. Same thing for not-for-profits and cooperatives, which are other types of corporations. And on top of that, you also get to claim any portions of health insurance, life insurance, disability insurance, workers' comp, which was not clarified first time around and has only recently been clarified, paid by the employer. Okay, so not the stuff that's paid for by the employee, but the portion that is employer cost, the company cost. Retirement contributions paid by the employer, that's considered a payroll cost. And state and local taxes on compensation, which is unemployment taxes. And then as I was saying earlier, if you are a Schedule C, Schedule F, or partnership filer, then you're going to have owner compensation replacement because you pay self-employment tax on your independent contractor or freelancer income. You pay that on your partnership income. So that's going to count as payroll as well. So this is a pretty comprehensive list, more or less, of what is considered payroll. So what is not considered payroll, what doesn't count? Federal payroll taxes. And when I look at people who have applied for PPP on their own and they didn't have somebody helping them, this is the #1 mistake that I see. They've tried to count federal payroll taxes. Payroll taxes do not count, only the state and local payroll taxes, which are just unemployment, right? Also, you cannot count as payroll anything that is over $100,000 a year with payroll. So if I were somebody who got $120,000 a year, and I'm trying to average my payroll for 2019, I would only be able to count the first 100,000 of that, okay? That's not just for owners, that is for anybody in the company. And then for all of the businesses in which you have ownership, there's a limit as well. So if I own 20% of this company and 30% of that company and 50% of that company, there's a limitation there as well of 2.5 months of my prior year's payroll. Wages that are used for employee retention credit, as I mentioned earlier, do not count as payroll because you can't double dip. And distributions, there's a lot of confusion about this. If you are an S Corp owner, for example, and you are an employee, therefore, of your company by law, and you get a W-2, and you haven't been paying yourself reasonable compensation, in other words, your payroll income is really, really low, and you're mostly taking distributions, you are out of luck on this one because this is really only payroll. Distributions don't count because you don't pay payroll taxes on them. There is a woman named Hannah Smolinski who I don't have any connection with. She's just a colleague out there who's doing really great work on YouTube trying to explain a lot of this stuff. And she's got a really good video at this link here that you can go onto, and she's going to talk through all of what I just said, but in a lot more detail. So how to apply. Requirements for first-time borrowers at this point. I mentioned a few times, I keep drilling it in, you have to have had a business established before February 15th, 2020, fewer than 500 employees. If you don't have employees, you must have had positive net income. You have to have profit in order to think about having payroll because profit is what you're paying self-employment tax on. You can use 2019 or 2020, whichever's higher. And remember, at least 60% of this PPP is going to need to be spent on payroll costs. For second-time borrowers, all of those things qualify as well, but you're also going to have to certify that you have used or will use all of your first PPP loan by the time you get the money for the second PPP. You can have no more than 300 employees, and you have to show a 25% reduction in your revenues year over year, or it can be one of the quarters this year over the same quarter last year. So I'm going to stop for just a second. Are there any burning questions out there that need to be answered before I start talking about how to apply?
Nothing over the transom so far. So why don't you keep
on
going?
All right, I'll keep going then. Okay, so to apply, you're going to need these documents, and all applicants are going to need these documents. The front and the back of your driver's license, you're going to need to scan those, or you can use your passport or a legal ID. You're going to need a voided or canceled check or a letter from the bank showing the company name, the bank routing, and account numbers. You're going to need a bank statement showing the company name that includes the date for February 15th, 2020, and that's as proof of business existence. Some banks are allowing alternative proofs such as articles of organization or articles of incorporation, but the bank statement is what most folks are requesting. If you're a sole proprietor and it's just got your name on the bank statement, that's okay. If you apply for PPP first time around, the SBA loan number. Now this is required. You are not going to get this loan through if you do not have the number from the first time around. It will get stuck at the SBA. And it's very frustrating because this has actually been hard to obtain from some banks. And I'm going to use Chase as an example because this happened to a lot of people where Chase never issued any loan documentation first time around that had this number on it. And so now people are coming around and they're doing the PPP2 draws, and Chase of course wants them to apply through Chase again. And so you say, well, where's my SBA number? And they say, oh, it's okay. When you fill out the application through Chase, it'll automatically populate. You don't have to worry about it. Trying to prevent people from going elsewhere to apply for these loans. And a lot of people got frustrated with big banks like Chase and Bank of America because, you know, there wasn't necessarily a lot of hand-holding going on here, and you know, not a lot of support. And so not everybody wants to apply with them a second time. You can call Chase and they have to give you that number. They will give you that number. And the SBA has been cracking down on that, saying that that's not very fair, you big banks. All right, this looks really difficult to read because it is, but I'm not trying to get you to read it. I just want to illustrate how you can show that you had a 25% decline in gross revenues. So this is a QuickBooks profit and loss report. I did not export this into Excel. I did not do anything fancy with it. There's really nothing about this that I did. This is from within QuickBooks. I ran a profit and loss report. And then on the upper left-hand corner of the report, I said to report by quarters. I did a report for 2019, 2020. And then I said report by quarters. And then under comparative periods, I chose previous year. And then I clicked the percent. And then when I clicked the run report, this is what it gave me. It showed me my income for the first quarter of 2020 compared to the same quarter in 2019. And it shows me my percentage change, right? So it's very, very easy to illustrate to the bank, look, I had a 25% drop. In this case, this person, they actually were doing well in the first quarter, but then in the second quarter, of course, they saw a drop of 96%. They had another drop of 46% the next quarter and a drop of 57% the next quarter. They would have been fine just using an annual one, but I wanted to be able to show you that you can run this by quarter. And all you do is sign this and you upload it with your application, and this is proof. Any reasonable indication, however, will work. So you could have a spreadsheet. If you have your 1099s from last year, you're an independent contractor and you have those from last year and you have them from 2020, you could just make up a spreadsheet and list each one of those and show the totals and sign that. You could go to your bank statement. You could add that all up on a piece of paper. You could write it out and sign that. You just need some sort of indication and support to show that you had a 25% drop. And again, this could be a drop for all of 2020 compared to 2019, or it can be a drop just for any one quarter in 2020 over the same quarter in 2019. Cash versus accrual basis, if that's a concern to anybody, just use what you would normally use on your tax return or in your regular reporting. Just be consistent. So if you're a corporation, you're going to need the IRS Form 941 for all 4 quarters of 2019 or the annual Form 940. These are your payroll tax returns. This is what your payroll company files for you every quarter. And this is to prove the payroll that you had. And of course, if you are a corporation or a nonprofit or a cooperative, other types of corporations, then you don't, there's nothing else. That's it. You get paid as an employee, your staff gets paid as an employee, as employees. And so you need that, plus of course, the health, vision, dental insurance, your retirement, the employer cost portion, you need something to support that. And then some lenders are requiring articles of incorporation or bylaws or operating agreements showing percentage of ownership, not all lenders. Now, if you're a sole proprietor, okay, so this would mean an independent contractor, a freelancer, a single member LLC, anybody who files Schedule C. Well, you're gonna need that Schedule C. And we're gonna go over that in detail later on. You're going to need Schedule C from your Form 1040. And then if you have employees, in addition, you are going to need the same IRS Form 941s for all 4 quarters or your annual Form 940. And then for a partnership, you're going to need your 2019 business tax return, that's Form 1065, including the K-1s. And we're going to go through later where you're going to get the number from payroll from that. And then, of course, if you had employees, you are always going to need those payroll tax returns. All right, so I'm going to go through how to apply. This is the SBA application, and I want to tell you the chances that you would actually be filling out this application are minuscule. Almost all of the lender sites that you would go to, they have their own portal where they're going to collect this same information. If you would like ahead of time to, go to the SBA website, make sure you're working with the most recent version of the form, of the application form. You can fill it out on your own, but then when you go to the site to apply, remember you're going to like a bank or a lender's site, they'll be asking you for this information, but it will not look the same. It'll be one screen at a time. So I'm going to walk through the application anyway, because it's all the same information. So make sure you're working with the most recent version of it. I think the thing that's really confusing here is these entity checkboxes. Okay, it says sole proprietor, partnership, C Corp, et cetera, at the upper left-hand side of this. They're confusing because as anybody who files Schedule C knows, you could be a sole proprietor, an independent contractor, a self-employed individual, and an LLC all at the same time. You might even be an LLC who files their taxes as an S Corp. So I think this is a big fail on the part of the SBA because it confuses a lot of people. My recommendation is that whatever your tax filing status is, choose that. So if you are a sole proprietor and you file Schedule C, check mark that. If you're a partnership, you file 1065, check that. If you're an LLC, but you elect to file your taxes as an S Corp, check the S Corp, don't check the LLC, etc. That's my recommendation. Now your NAICS code, you'll see that box on there. That's the North American Industry Classification System code. And that just means what kind of business are you? Are you an architect? Do you work in a hair salon? Are you an accountant? And that NAICS code should be on your most recent tax return. If you can't find it, you can just look it up at naics.com/search. This is what that page looks like when you go to that website. And you just enter the keyword for what you do for a living, what your business is in that top thing there, and it'll pop up with what your NAICS code is. For your business tax identification number, most people know what their EIN is, but if you're a sole proprietor without an EIN, your business tax identification number, the TIN, is going to be your social security number. If you are an owner in multiple businesses, the business is going to need to file an application for each separate business. There's a different EIN, of course, for each business, and so those are going to be unique from application to application. So we're going to come back to this screen a little later on once these things make more sense. But the average monthly payroll, that's the most important number that you're going to be putting in here. Because remember what I said earlier, the average monthly payroll times 2.5 is what is going to be your loan amount. Or if you're doing a PPP2 borrowing and you are a restaurant or a hotel, then it's going to be times 3.5. Okay, so that determines the final loan amount. This is the important part. It should include the staff and the owner compensation together. If you have employees and you are a sole proprietor, you're going to need to figure out what your payroll for yourself as a sole proprietor is, or if you're a partner, you're going to need to figure out your payroll and payroll for the other partners and the payroll that you pay your staff via W-2. You're going to add those together and put that in this average monthly payroll. That confuses a lot of people. The number of employees on here, it's just a head count. It's not full-time equivalents. It's just count all the employees, full-time and part-time, and write that in there. It's not, it's just used for informational purposes. Always check payroll costs as one of the purposes of the loan, because that's really the whole point. The rest, they don't really matter. They're just used for informational data. Fill them out as it makes sense to you. So how to apply? If you are a sole proprietor, independent contractor, freelancer, single member LLC, you have to figure out what your payroll is, right? So you're going to look at your Schedule C on the 2019 IRS 1040 tax return. Line 31, it's circled there on the screen, is your net income. So if you have no employees, this is easy peasy. Take that number, divide it by 12. That's your monthly payroll. You're going to multiply that by 2.5, 3.5 if you're a restaurant. Although if you're a restaurant and you're doing this by yourself with no employees, I'd be really surprised about that. And so as you can see in this example, line 31 was $60,000. So you divide that times 12 months. That's $5,000 average payroll per month times 2.5, 12,500. That's your loan. Partnerships. Partnerships are a little more complex. You're going to want to find your 1065, which is your partnership return. This is what the front of it looks like. And you're going to want to go like about 4 pages in. There's something called Schedule K. And you're going to look at line 14A on your Schedule K, okay? I use the same number here, 60,000 is the last one, keep the math simple. And line 14A is the total net earnings from self-employment. Remember, we keep talking about self-employment tax, payroll tax, Social Security, Medicare tax. These are dollars on which you pay those taxes. Total earnings from self-employment for all of the partners. Now, if none of your partners earned over $100,000, you can just use this number as your partner payroll total. Again, you can use 2019 or 2020. For most people, 2019 is gonna make more sense, right? But if anybody made over $100,000, you're gonna have to look at line 14A for each individual partner, okay? So you're gonna look at the K1s. The K1s are part of the tax return. When you add up the lines on all of the K1s, I'm gonna go back one. When you add up all of the lines on the K1s, it equals this 14A on Schedule K. Right, so this is just one partner's K1, and down there you can see line 14A, they made $20,000 this year that is taxed for self-employment income. If there was one who made 20,000 and one who made 10,000 and one who made 30,000, well then 60,000 for the whole company, and you can see you would just divide that by 12 to get your $5,000 average, and we ended up with the same exact amounts as before. But I'm going to go back one to point out the reason you would need to do this for each partner, each individual partner, is only if one of them made over $100,000. If one of them made over $100,000, then you can't add up the entire, you can't take the whole amount from line 14A. You can only take $100,000 as a max for any one partner. Okay. And then for your employees, and this includes owners of corporations, because remember, you're an employee of your own company. Log into your payroll processing company and go to reports, because what you're looking for here is your total gross payroll for 2019 or 2020 if it was higher. Again, that's unusual. Most payroll companies at this point, they have a PPP report that you can use. I use Gusto for all of my clients. This is an example of what the little box looks like on their screen when you're looking for the PPP report. And I have a link there that actually is a blog post of theirs explaining how they calculate the numbers in the report. Don't forget to add in the employer portion of health insurance and retirement. Then you're going to take that, you divide it by 12. If you're a corporation, this is the only thing you need, is that report. It's going to do it for you. Okay. So I'm coming back to this page, the average monthly payroll, because now that we understand how you calculate it for a self-employed person, for a partner in a partnership, or for your employees, including yourself if you are have a corporation, the average monthly payroll, it has to include staff and owner compensation. You're going to combine them, like I said. So if you're a sole proprietor, take that line 31 on Schedule C, and if you have employees, their total calculated payroll from your payroll company's report. If you're a partnership, take Schedule K line 14A, and if you have employees, the number from that payroll report. And if you're a corporation, all you need is that payroll report. That's the amount that you're going to divide by 12. And you're going to put that in the average monthly payroll box. You're going to multiply it by either 2.5 or 3.5, depending on the situation. Then you're going to have to list a bunch of personal information about each of the owners. If anybody owns 20% or more, they do have to provide their social security number. If one of the owners is another business, you would provide that business's employer identification number. And then there are a bunch of questions that you have to answer here that you don't need my help with, that would indicate whether you were ineligible for some reason. For example, if you've defaulted on an SBA loan in the past. There is a question at the bottom about whether or not the applicant is a franchise. I'm surprised at how many of my own clients ask me if they are a franchise. McDonald's is a franchise. Like, you would know if you were a franchise, okay? If you have more than one location, that does not make you a franchise. I'm going to take another break for just a second. That was a lot. We're going to talk about where to apply next, but if there are any burning questions about the stuff I've just gone through, let me know.
Again, doesn't seem like anything's coming over the transom so far.
All right.
So why don't you
I'll just
take
keep
us
moving
through the final portion here.
Sounds great. So where do you apply? Local banks, community lending institutions, and online banks are alternative lenders, not third-party brokers or middlemen, but actual online banks and alternative lenders. They have a much higher satisfaction rate than the big banks. I am not down on big banks. I have a dear friend who is high up at Bank of America, and I know how hard they've been working on this. They really have. But it's a lot of people to service, and they don't have the staff to hold anybody's hand. So I get it. It's hard. And the fintech companies that have come out, there have been a lot of them, online banks and alternative lenders, and there have been a lot of brokers as well. So fintech companies that are third parties that will point you to one of these. I'm staying away from those folks right now because I like going directly to the bank, because it's one fewer party that the loan has to get through before it gets to the SBA. So some examples of third party ones, and they're not bad. I'm not, I don't have any problem with them, but like Cabbage is one. I know Intuit Lending, QuickBooks' parent company, had another. There are a bunch of them out there. PayPal is another example. But there are a lot of great online banks. For round one, my clients had the best luck with Cross River Bank. They don't have a very elegant portal or interface, but they were very, very quick. Their support was good. Most of my clients had really good experiences with them. This time around, our company is actually doing all of the applications for our clients. We realized it was just going to make forgiveness applications easier when it comes time to do that. And we really wanted to make sure that we were getting as many dollars as each of them was entitled to. So we are actually subscribed to the American Institute of CPA's loan portal, which is powered by Biz2 Credit. But I looked into it, and it turns out Biz2 Credit actually does direct lending to the public as well. You don't have to go through a CPA loan portal. So here is a link to a really nice article that they wrote about the details of the program. And then also the SBA's lender match tool. There's a link to that. If you don't have an existing relationship with a lender, if you don't have a local bank or a community lending institution that you're working with and you would like to, you can find a good lender match online. Nav.com is another one that does a really nice job with lender matching. This is just information. I don't earn any money from Biz2 Credit. I don't have any affiliation with them. But I thought I would just make this as easy for you as possible. There is the link if you want to go directly to apply. And this is a little screenshot that shows you what the process is. Although to be fair, this is pretty much the process with any online bank that you would go to, even one of the big banks. And then there are a lot of resources here that I want to point you to. The American Institute of CPAs has free to the public resources. You do not have to be a member. They have loan application Excel calculators. They have loan forgiveness calculators. They actually have far and away the best loan forgiveness spreadsheet calculator I have seen so far, and it is free. They also have a really great PDF summarizing the entire PPP. Gusto, which I've mentioned a few times, is the payroll program that we like the best, that we use for our clients. They've just done an amazing job with this. They do an amazing job with most things. They're a great company. But this article right here, again, available to the public. You do not have to be a Gusto customer. This is the one I would print out and have next to me while I was going through the application. It says step 1, step 2, step 3, very methodical, very clear. And it turns out they're using Biz2 Credit for their recommended lending partner as well. So that gave me a little bit more confidence in that lender. SCORE has a really great write-up on the how to qualify and apply for the loan that I recommend. And then I'm going to come back to Clara CFO. Again, Hannah Smolinski, she's got a whole channel out there. The one caveat I would say when you're looking things up on YouTube or Google or anything is restrict just for things since January 1, because we had a ton of changes that happened in late December. I had a very interesting week between Christmas and New Year's, scrambling to learn about the new programs and the changes, retroactive changes to the programs. And so anything that's going to be before January 30 or January 1st by anybody is really going to be out of date at this point. The rules are different now. So if you're doing stuff through Clara CFO or anybody else online, do make sure you're looking at stuff that is with the new legislation. If you get denied, now what do? Ask your lender why it was denied. Understand the status of your application. At this point, 25% of applications from all lenders, not just the big banks, small banks, everybody, they're being held up because of these SBA validation requests, which are these error codes, but the SBA hasn't told the lenders what these error codes mean. So it's very difficult for them to figure it out. And so we're just kind of adopting a wait and see approach where we know that the money is likely to last to the end of this. And so for our clients who've gotten stuck sort of at the SBA and we're not sure what's wrong, we're giving it a few days or a week or so to clear out until the SBA offers a little bit more guidance on what those error codes are. So if it hasn't been rejected, maybe it's just taking a little bit of time. It can easily take 2 or 3 weeks for this to get funded. It is not as quick as it was first time around. The SBA is being a lot more careful because there were so many fraudulent applications first time around. If you have an existing PPP1 application that you have already submitted for forgiveness and it has not been forgiven yet, we're seeing that this is holding up the process at the SBA. It's just like they're confused. Oh, I have a forgiveness application. I have a new application. I don't know what to do. Give it a week. It'll probably work itself out. It doesn't mean it's being rejected. It's just taking longer. If your application was denied because of an error, you can submit a new corrected application, or you can try another lender. Make sure to withdraw your application from the original lender, but there's no reason. I had some clients who had to go through 4 lenders first time around because something went wrong, especially with partnerships. Lots of these banks, lots of these lenders do not understand that partnerships need to add together the self-employment income for the partners plus the amounts that they have paid their staff, and so they get confused and gets rejected. So just try another lender. If you're sure you're qualified, don't give up. Consider requesting help from a community resource, a not-for-profit, a small local bank, or an accounting professional. You know, it could be worth your while. All right, so I'm going to talk very briefly about forgiveness. This is not a webinar about forgiveness. I could spend an hour on this. I'm not going to, but I'm going to sort of blow through it. I want to give you some context around forgiveness, and then you have these slides for referring to later. So the amount of loan forgiveness can be up to the full principal amount of PPP loan and the accrued interest. We are seeing 100% forgiveness with most of our clients, not all of them, but almost all of them. And for those that had a few reductions, it was not a huge dollar amount. At least 60% of the PPP loan proceeds have to be used for payroll costs, but there are lots of really crazy, difficult, frustrating rules. If you have a loan that's $50,000 or under and you don't have any employees, don't worry about this stuff. This doesn't apply to you. You really don't have to worry about it. But if your loan is over 50K and you have employees, you have to know that there are specific requirements. You can't just spend it all on payroll. There are requirements for not reducing anybody's hours too much, not reducing anybody's wage or salary too much. If you don't pass those tests, it's okay, because there are 3 different safe harbors that you might qualify for that'll get you out of that. It's a topic for another webinar. But just know that there's a lot of complication there. So you need to take a webinar on forgiveness if your loan is over 50K and you have employees. Most folks will qualify for a safe harbor if they were forced to be totally or partially shut down for a period of time during 2020. That's a safe harbor that's working for most people. The loan forgiveness covered period is going to begin on the date that you receive the funds from the lender, and it ends, this is different than the first time around, it ends anywhere between 8 and 24 weeks after the date of disbursement. Last time it was either or. It was either an 8-week period or a 24-week period. This time you get to decide. There's a lot more flexibility. And I want to remind you again, if you were taking or are going to take the employee retention credit as well, you cannot use those wages for forgiveness for PPP. We're currently recommending to our clients that they wait to file for forgiveness because of this ERC and PPP interaction. It's so new. We're going to be going back and claiming some missed dollars for them by filing amended payroll tax returns for 2020. And I want to make sure that I know what the amounts of those are before we do any PPP forgiveness applications for PPP1 for the first time around. So, you know, you might want to hold off on forgiveness until you know whether or not you're going to take the ERC because it's super complicated. Here's a list of eligible costs for forgiveness. It used to just be 60% payroll, and then the other 40% was just mortgage interest, rent, and utilities, but they have expanded that. You've got another bunch of categories that are now allowed for that 40% that is not payroll. And for more details, I'm gonna defer it to Hannah Smolinski as well, because she's got a bunch of these smaller videos that are just, you know, 10 to 20 minutes long each, and she's got a whole video on eligible costs. If your loan was for $50,000 or less, you're pretty much scot-free. It's the easiest forgiveness application. You sign and submit this one-page form. You say, yes, I complied with the requirements. It's super, super easy. If you're between 50 and 150, it's the same form, which makes you think it's the same thing, but it's not. The SBA said that if it's 50,000 or less, you don't even have to worry about reductions in full-time equivalent employees or reductions in employee salary or wages. You don't have to go through any of it. If you're between 50 and 150, you do have to worry about those things. You just don't have to submit them with your forgiveness application. So for my clients, we're doing the same thing for anybody who had, you know, $51,000, you know, all the way up to our highest one. We're doing all of the paperwork, all of the calculations, figuring out whether or not safe harbors apply. We're doing all of that, even though for these folks, it's such a simple application, because if you get audited later on, you're gonna need to show that you complied with those rules. And if it's above 150K, you have a lot of work to do. You might wanna consider working with a professional on that. And what happens if it's not forgiven entirely? It's actually not that big a deal. It's a loan with a 1% interest rate, very low interest rate. And most of them have 5-year terms. Some of them from early on have 2-year terms. If you're one of those people, you can actually negotiate with the bank to extend it to 5 years. They're deferring payments for 10 months after the end of your covered period. If you have a small amount left over that didn't get forgiven, you know, just think of it as being the best loan you ever got. And then here's a whole page that I'm not going to go through. These are official resources and forms. They're in the slides, and you can click on any of these. And this is the original source data. Thousands and thousands of pages. We've all been very, very busy over the past year reading stuff from the SBA, Treasury, and the IRS. Now, I want to mention before we go into the last round of questions, the SBA is doing a free webinar on Tuesday, February 23rd at 10 a.m. Central, and there's a link to sign up for that in the slides. And so if you didn't get enough PPP and you have some specific questions that you want answered, get it straight from the horse's mouth. SBA is going to be helping us out.
Fantastic. Nancy, is that all you got?
Oh yeah, that's all. That's
well,
all.
This is super helpful and super thorough. We really appreciate you joining us this evening. We are going to stay on the lookout as this post sort of ages on our social media platforms. We'll keep our eyes peeled for questions. We'll answer as many of them as best we can, but if there are questions that are specifically for Nancy, we'll forward them along to you. Just a couple of wrap-up notes before we sign off for the evening. So we're going to drop a link into the Facebook chat here to a page on our website where you can review the slides, download the slides that Nancy just shared, and click on all the links. As you saw at the end, there's an awful lot of informative links throughout the slideshow, but in particular there at the end. You can watch some of those YouTube videos that Nancy was referencing as well. We're also going to work on a dubbed Spanish version of this presentation. So if you have Spanish speakers who you think this would benefit from all this information, hold tight. We're going to get the translation done and get that out to you all in short order. Nancy, thank you so much for your time. It's always wonderful to see you, and thank you for putting together all this fantastic information for our community.
I really appreciate the fact that you guys reached out. It makes me very, very happy to support the small business community in general across the country, but especially, you know, in my home, Logan Square.
Yeah. All right. Well, if there's a PPP round 3, we'll have you back.
Not yet. Let me get through tax season, please.
Right. Of course. All right. Well, listen, take care. Thank you everyone for tuning in, and we'll be in touch.